Welcome to my How Do series. Today we're going to talk about how do pre-approvals work. So let's get started on a pre-approval. The first thing we're going to look at is the actual application. So I want to show you what one actually looks like. This is a standard form and went through some major revisions in the last few years from what we used to call the 1003 to pages. Now they're sections. So as we need certain sections, they expand open. If we don't need them, they expand close. And they have a lot of different things that they're looking for now. But there's a lot of things that are very similar to what the old form used to look like. But this is the standardized form that every lender is going to use that has really become an industry standard and even in some cases regulatory standards of how an actual application looks like. So let's look at a few things that are on the actual application. Now, the first section is always the borrower's information. This is going to have your names, social security, date of birth, marital status, all these different things here. Your current address will be on here. With the current address, they're always looking at a 2-year history. So wherever you've lived and worked for the last 2 years, they want to see on the application. So that's what the current address is going to be at. If there's something different, you'll have this section here if it's less than 2 years. If there's multiple ones, the boxes will open up for as many homes or as many addresses as we possibly need. Next section is going to be employment. Same thing. They're going to go on current position, type of job, how you get paid, if you're an owner, so if you're self-employed, the type of income that you make. And again, it's going to be a 2-year history. So you've got this one here, and if there's a second one here, if there's a previous, they put it here. You can see this little does not apply. These boxes will then shrink those sections so we don't need it on the application. So as we go through it, we adjust the application. There'll be other income sources. You can see this whole list: alimony, disability, Social Security, mortgage credits, foster care, disability benefits. I mean, all kinds of different things. There's even just a box of other right here. If this doesn't fall into one of these categories, then it can just be under other. Usually it's going to fall under something that's in these boxes. Next one is going to be where the down payment is going to come from, whether it's a checking, savings, money market, stocks, bonds, bridge loans, trade account, cash value, life insurance, all those things. So we put in the type, the institution, the account number, and how much is in that account. With this, let me back up a little bit. With this, any bank statement, we're typically going to want to see the last 60 days. So a quarterly statement on most retirement accounts or the last 2 complete months of the bank statement. We also need to see where the earnest money is coming from. In most purchase transactions, you're going to put some money down that is an earnest money deposit that if you don't pull through your end of the contract, the seller gets to keep that amount. I've seen it as little as $500 all the way up to 10 grand, 20 grand. Just depends on the deal, how much earnest money is actually associated with it. But we still need to see where that money is coming from. So a lot of times bank statements go in 30-day cycles, very commonly to the first of the month. I've seen some bank statements that will actually go from, say, the day you open it, the 10th of the month, 30 days later, the 10th of the month again. But more commonly, it's each month. So if you have a earnest money check that clears, say, on the 10th of the month, then we have to get the last statement and then a transaction summary that builds the difference or builds the gap between the statements. So from the end of the last statement to the day the earnest money clears to see what's actually available and prove that the check actually cleared that account. The next thing is other assets. So proceeds from the sale of a home, unsecured debts, other credits, they would go in this section. Then we get into liabilities. So this section is usually pulled from the credit report. When we pull the credit report, we can import that data into the application itself. But if there's some debts that don't show up on that, like child support, alimony, those other things, we can put it in this section manually. So it doesn't only have to be on the credit report. The next one is what they call schedule of real estate. Any other properties that you own other than the subject property, if it's a refinance, if you have rental properties, second homes, there's this section here that can expand as wide as it needs to have all the rental properties that you might own. So you can see this thing has really thought of almost everything. And then the property loan and type. So this is the one you're trying to finance, whether it's your current home or whether you're buying a home. This section would fill out here, what type of home it is, whether it's manufactured or stick built. Then we get into whether the property is being rented. You get grants and gifts, all this fun stuff. Then we have the declaration section. This is a section of yes and no questions about whether you filed bankruptcy or had judgment, if you're a first-time home buyer. One thing I would tell you about first-time home buyer, look at this right here. If you've had ownership interest in a property in the last 3 years, so you are a first-time home buyer if you haven't owned a home in 3 years. Now, you hear first time and you think forever, but it's last 3 years. So if you owned a home 5 years ago and sold it, and just haven't bought a home since then you are actually reclassified as a first-time home buyer, even if you have owned a home sometime in your life. They look back at the last 3 years, 36 months of when you've actually owned a home. You got other sections in here about child support, separate maintenance, alimony, federal debt. So if you have any IRS tax liens or anything you owe there, any judgments, any lawsuits that you have against you, all these are yes and no questions here. And then they have some sections about what certain things are and some general disclosures that are on here, and then the borrower signs it. This talks about military service. So if you've served in the armed forces, we check those boxes. And then demographics. This one has changed a lot. It used to be pretty simple. Now it has way more expanded. You don't have to provide it if you don't want to at any time. So people say, well, why do lenders need this information in the first place? Well, we're under fair credit reporting. We're also under equal housing opportunities. If they don't track the loans I'm doing to see if I'm offering the same opportunities to everyone, they can't know if we're being discriminatory. So this report, known as the HMDA report, will go through and say, okay, let's say I take 10 applications for, say, Asians and only close one loan, but take 10 for Hispanics and close 8. They're going to start to wonder, okay, are you are you not applying the same rules to everyone? And then you can, of course, you don't have to answer if you don't wish. It's just for tracking purposes, more for me and the mortgage company than how it directly affects your loan. And then there's also ethnicity, race. We can put all kinds of different things. And before, you can only click one, so you had to get what was most likely. Now I can click everything. You can be a Hispanic, Asian, Native, and Hawaiian, depending on how you want to classify yourself. So, and they even give us other options. So if it's something where you don't classify yourself as a Japanese, Asian, something like that, you can put whatever tribe or whatever group that you're a part on. You can see the examples here. I haven't even heard of some of these, but it is something where all these are available, or multiple, or manually put it in, where that's really expanded. And then this section is my individual licensing numbers that stay with the file. If there's any fraud or any kind of discriminatory act, that stays with that loan file. If they ever find something wrong, they can come back and say, hey, did you know what was going on? Did you know you really weren't talking to Mr. and Mrs. Smith? Why did you say no to that particular client? Those types of things. So that is the application. This right here is some lender information that goes into the back end of the file to know what type of loan we're doing, what type of term. So you can see it's quite a long document here. So all of this information is compiled. Let me go back up here to the top again. So all this is compiled on the Uniform Residential Loan Application, what we call the URLA, and this will determine your pre-approval. Once all this information is in the system, it allows us to pull the credit report, double check your debt ratio, get an idea what your job history is like, work history, how you earn your income. All that is calculated and thrown into a system to determine if you're eligible based on what's on the application. Now, obviously, you can tell us you make $10,000 a month and maybe you only make $8,500 a month. That can change the approval. You could also say, well, the home's worth $500,000. Maybe it's only worth $4,000. That can change the approval. So that's why it's a pre-approval, that based on the information we have, as close as we can get it, we will issue a loan once we check all those informations out. So why pre-approval is so important is it really lets you know what you're qualified for, what things you need to work on to maybe get to the next tier of qualification, or work on your credit, or maybe instead of putting as much money down, maybe we pay off a couple of debts to help your debt ratio. But that's part of my job, is to have this information to give you all the loan options that are available. So it really, really is your first step when going into the home buying process. Get pre-approved, start the application, review your financial options to know what type of loan you're qualified for, which ones have benefits and disadvantages, and get the letter from us that you can give to the seller or the real estate agent that says you've done your due diligence on this first step. I can't tell you how many times people will wait to do this step, and it just causes so much more problems down the road. Start early. It never hurts to get this started a little bit early. So if you have any comments, questions, or concerns, please put in the comments down below. I'd love to answer your questions, but this is a basic idea of how a pre-approval works and what goes into a mortgage application. Hope you're having a wonderful day. If you're ever looking for a loan in Utah and Nevada, I'm in southern Utah, St. George, Utah, but I'd love the opportunity to work with you on purchasing or refinancing a home. Check out my website at ryanbolt.com. Hope you have a wonderful day and see you next time.